The Thibeault, the honourable member for Sudbury.
Thank you, Mr. Speaker. And before I begin, I think I need to inform you in the House that I'll be splitting my time with the fine gentleman and the fine MP from Burnaby, New Westminster, who does a fantastic job on this file and many others. Mr. Speaker, I rise today to speak to Bill S5, which looks to update the legislation relating to banking and financial institutions in Canada. Anyone who follows my interventions in the House, Mr. Speaker, will know that these issues are very close to my heart as the NDP consumer protection critic, and I think it is very important for parliamentarians to have the opportunity to review the legislation that relates to the banking sector. Mr. Speaker, banks are vital to the Canadian economy. Canadian banks directly employ 250,000 people across the country and pay almost $1 billion in payroll taxes each year. They also spend around $15 billion on services and goods within the economy, thereby indirectly supporting even more jobs. Moreover, banks and other financial institutions provide a vital service to the economy as a whole, providing lending services for individuals to buy homes and for businesses to invest and expand. And because of this, Mr. Speaker, it is important to ensure that Canada has a world-leading system of banking regulation, which allows our banks to stay strong and support the economy as we continue through the time of global financial uncertainty. And because of this, I will be supporting this bill at second reading in order to ensure that this important legislation gets the attention that it deserves at committee. Unfortunately, as so often been the case since last year's election, the government is more interested in ramming through legislation than in the process of debate, which is the hallmark of Canadian democracy. Firstly, we again find ourselves limited in the amount of debate we can have on an issue before the House. By my understanding, the government has now shut down debate 16 times in just 80 sitting days, and 4 times in the last 12 days. This bill amends 13 pieces of existing legislation, including the Bank Act, all of which relate to the direct functioning of our economy, and yet the government is trying to push this review through without the dedicated analysis which these changes warrant. Debate in this chamber, Mr. Speaker, is not just for show, and it's not just for some inconvenience for the government. It is fundamental, Mr. Speaker, to the proper functioning of our democracy. It allows various points of view representing the geographic, cultural, linguistic, and social diversity of our great country. To be part of this legislative process is too important to be continued to have time allocation, Mr. Speaker. Secondly, this bill was introduced in the Senate rather than here in the House of Commons in front of democratically elected representatives, and then, just as here, the bill was pushed through their legislative process without proper review. In fact, the whole process took just 3 weeks. This is the second major economic issue that the government has pushed to the Senate, the other being the study of price differentials between the U.S. and Canada, in order to marginalize the ability of democratically elected parliamentarians to take part in important debates. It also worries me, Mr. Speaker, that the government has failed to widely consult on these changes before introducing this review. Given the important role of the banking sector in our economy, I find it disturbing that there was not any coordination of national public consultations with consumer groups and small businesses to try and understand how their banking system could be improved from their perspective. In fact, the government's little-publicized online review solicited only 30 submissions, and 27 of those respondents opted to remain anonymous, Mr. Speaker. While there may be some important details to be drawn from these submissions, I find it highly doubtful that we can hope to understand the full range of opinions, the full range of debate on how to update our banking legislation from such a small sample size. Now, let me look in detail on some of the issues that are addressed in this legislation, Mr. Speaker, specifically relating to my own area of focus, consumer protection. As our consumer protection framework works, at the moment, various government departments are responsible for consumer protection for specific issues. So it makes it very, very difficult and very hard for consumers to know where to go when they're confronted with a consumer problem. Depending on the type of issue to be resolved, a consumer may be required to work with Industry Canada, Health Canada, Transport Canada, or on issues relating to banks and financial institutions, the Consumer Agency of Canada, also known as the acronym FCAC. Ending this confusing framework would have gone a long way, Mr. Speaker, to ensuring Canadians have more confidence in their day-to-day dealings with financial institutions. However, as the government refuses to move in this direction, what is offered for consumers? Firstly, this bill extends the definition of consumer provisions in regards to financial institutions to include agents and affiliates of banks who offer financial products. This extends the scope of entities which come under FCAC's consumer protection provisions, which I support. It also increases the ability of the government to introduce regulations and deferred legislation, which gives the government the opportunity to introduce further consumer protection measures in the financial sphere. Furthermore, the bill increases the maximum fine that FCAC can levy on financial institutions from $200,000 to $500,000. Mr. Speaker, all of these changes should be welcomed, but with some caveats. The increased ability to introduce consumer regulation is only noteworthy if the government utilizes that ability. Otherwise, it is simply a nice talking point, Mr. Speaker. The same can be said for increasing the maximum fine that the FCAC can levy. When this bill was first introduced in the Senate, it was pointed out by various stakeholders that FCAC very rarely levies its current lower maximum penalty. Given this fact, increasing the maximum penalty seems to be somewhat of a toothless change. In effect, these changes, while welcomed, seem much more powerful in theory than in practice, Mr. Speaker. But this bill, Mr. Speaker, is missing a change which would have no cost for the government and massively increase the clout of both consumer and small business protection regimes in Canada. Namely, mandating the banks must be part of the Ombudsman for Banking Services and Investments Complaints Resolution process. OBSI, Mr. Speaker, offers a fair method for consumers and small businesses to address complaints with banks which cannot be dealt with by a bank's in-house complaint mechanism. However, under this government's watch, both RBC and TD have been allowed to leave the OBSI system and instead use a Bay Street law firm to settle complaints. This law firm has been hired by the bank, and as the bank's customer, their first priority is to please their client, not to offer a proper method of redress for consumers and small businesses. Mr. Speaker, this is simply unacceptable, and the government should step in and mandate banks to use an impartial, and I'll say that again, impartial investigation process. Moreover, Mr. Speaker, there is nothing in this bill to even look at the fees and charges levied by banks. I have heard from hundreds, if not thousands, of Canadians regarding ATM fees, credit card interest rates, and current account charges. Banks obviously need to make a profit and be viable, but when you compare this bill to, say, the amendments tabled by Illinois Senator Dick Durbin in the U.S., you can see there is room for a discussion, a debate on these issues. In terms of consumer or non-consumer related issues, this bill does have some changes which require some vigorous debate. For example, Mr. Speaker, this bill would require Canadian banks to gain ministerial approval if they wish to purchase foreign entities. It would also increase the value a bank must reach before it is required to have its shares widely held, and it would allow Canadian financial institutions to sell their shares to foreign institutions which are ultimately owned by foreign governments. Mr. Speaker, I could go on and on about the importance that we have on this subject and the debate that we need to continue to have, but I know my time is running out. So in summary, Mr. Speaker, if the government refuses to listen to these groups and insists on passing this bill in its current form, then at best this bill will have little positive change and at worst could end up doing more damage than good. Thank you, Mr. Speaker.